Continuing from part 1, we continue discussing the fair tax. Next, let's consider elasticity's impact on demand. When the consumers exhibit inelastic demand in a market with unit elastic supply, we see a more vertical demand curve. We see the firm suffer a relatively small decrease in operating revenue with the government taking an enormous amount of revenue. The total price consumers pay for goods in this market sharply increases when the fair tax is levied. The revenue box tells us that the overwhelming bulk of the tax is collected from consumers who endure a large amount of deadweight loss. Finally, we consider elastic demand with unit elastic supply. This is a business killer because of incidence and total price after taxes sharply increasing. Revenues earned by the firm nearly completely disappear while tax revenues boom. We see a sharp drop in consumption with the firm paying the bulk of the tax revenue. Business can't pass along this tax without angering customers. There is an enormous amount of deadweight loss when demand is elastic. So, the answer to the question of incidence is the answer frequently given by economists: it all depends. From this quick exposition, we see that it depends on the elasticity of supply and demand and the amount of shift in the market. Let's take an example where there is slightly inelastic supply with slightly elastic demand. The total price people are willing to pay in the market will only increase slightly, but in this instance we see a large decline in the quantity exchanged. The firm's profit is eliminated, and must take a loss in the short run. In the long run, if these conditions persist, the firm must shut down and eliminate its employees. In the short run, there is enormous deadweight loss borne by the firm with nearly all the tax revenue drawn from the hapless entrepreneurs. Clearly the fair tax is not fair for these firms. Economists studying deadweight loss failed to come to a specific conclusion, but it is clear that it acts as a barrier to progress and is rife with inefficiency. In a study, Edgar K. Browning estimated the primary deadweight loss ignoring secondary and tertiary effects to be between 10 and 300% of tax revenue generated by taxes like the fair tax. Charles Stewart studied the issue and found deadweight loss to exceed 50% of collected revenue. Ballard, Chauvin and Wiley found similar results. These studies underestimate the behavioral responses of taxpayers to changes in levies. Drs. Vedder and Galloway estimated an additional 38 cents per dollar collected in taxes as a result of deadweight loss. It is noted that this effect was observed by Engen and Skinner. Other studies by Martin Feldstein of Harvard found an elimination of $2 in deadweight loss for every dollar decrease in tax revenue. Adding to the inefficiency of the fair tax, a collection bureau will force every independent business to become a hated tax collector. A private firm's mission will shift from satisfying customers with goods and services to extracting cash from an unwilling tax base and handing it to an unfriendly federal bureaucracy. Mostly, business owners don't have the luxury of working a simple 9-to-5 workday. Most businessmen work long hours to satisfy desires of their clients, accurately forecast the needs of the firm, and assure the firm runs smoothly. Adding the burden of collecting and satisfying the federal tax bureaucracy on top of dealing with the obscene level of regulation is really too much to ask of these already burdened entrepreneurs. The fair tax proposed by supposed conservatives does not eliminate the 16th Amendment to the U.S. Constitution, which created the legal atmosphere for the income tax. A new constitutional amendment to dismantle the income tax has not been addressed to this author's knowledge. Eliminating Subtitle A and C of the Internal Revenue Code of 1986 isn't enough. What is likely, given the track record of both the Republican and Democrat parties, is the addition of a national sales tax to the federal income tax. Each tax presents challenges to a healthy economy. Deadweight loss, the loss that results from consumers changing their economic behavior, makes the current income tax and the fair tax undesirable. The fair tax adds legal risk to the firm if they don't collect revenues for the government to the government's full pleasure. It could make criminals of the innocent, which is a disincentive for entrepreneurs and those doing business in the United States. It adds the risk of accidental default or accounting error. That extra risk is neither necessary nor healthy for the economy. Let's not be swayed by power-hungry politicians and leftist conservatives like Norquist and others by continuing a power-hungry agenda aimed at maximizing federal dominion over private peaceful commerce. Eliminate the income tax and replace it with nothing but a humble federal government that knows it doesn't know better.